Welcome back. You're still watching World Insight. I'm Tian Wei. Let's now turn to China's foreign exchange reserve. Numbers were released by the State Administration of Foreign Exchange on Tuesday. China's foreign exchange reserves stood at approximately $3.11 trillion at the end of December. Meanwhile, the foreign exchange regulators also decided to improve its services to the public by removing 11 documents required for businesses to use foreign exchange. Before we get down to the discussion, take a look at this first.
China's forex reserves bounced back to above $3.1 trillion by the end of December. That's about $35 billion from the start of 2019. China's business environment continues to improve. During the 12 months ending May 1st, China carried out a record 8 business reforms, ranking among the world's 10 most improved economies for ease of doing business for the second year in a row. Meanwhile, the foreign investment law that took effect this month aims to broaden market access for foreign businesses. Latest data shows by the end of 2019, nearly 1 million foreign invested enterprises have been set up in China, with FDI into China ranking first among all developing countries for 27 consecutive years. That is a vote of confidence in China's financial market and efforts made for business reforms.
For more on China's economy and certainly the number of China's foreign exchange reserve, we are joined in New York City, Anthony Chen, former Chase chief economist at J.P. Morgan. In our Beijing studio, Liu Baocheng, dean from the Center for International Business Ethics from University of International Business and Economics. Gentlemen, welcome to the program. Professor Liu, how should we see the increase of number in terms of China's foreign exchange reserve? Does it have much to do with trade?
Well, actually, there are two sides to this coin. And one is that China does really have tighter control over the outflow of capital. And the other is that Chinese foreign exchange earning capacity out of the export is still very strong. And three is that the foreign direct investment into China is still the major contributor to Chinese foreign exchange reserve. So therefore, given these three forces, actually, to maintain above 3 trillion is something that is really within our expectation.
Okay, Professor Liu, what does it really mean? I mean, when China is having an increasing in terms of the amount of foreign exchange reserve, does it mean China will be more persistent, will be strong in its economy, or at least in the interaction in trade, for example, with the United States?
Well, I think 3 trillion is really the comfort level of the Chinese regulators, and there has been much debate over whether China should really maintain such a high level of foreign exchange reserve within the Chinese state-owned state administration of foreign exchange. And more should be given to commercial banks, to the individual business players.
Yeah.
There is really a consistency in Chinese policy that 3 trillion is really the threshold that they feel comfortable with. But in the meantime, we do see that China is really diversifying. One is the destination of the Chinese foreign exchange reserve, and to reduce reliance on the U.S. And the other is that we are trying also to diversify into more equity positions through different type of funds, etc. So instead of simply use it to buy the treasury bills.
Mr. Chen, your take about the increasing number China foreign exchange reserve?
Well, those three factors are especially true, but I'm going to add another factor, and that is that the Chinese yuan has also strengthened, so due to valuation effects, those foreign exchange numbers tend to pick up. You might recall that last year in September, the yuan was 7.18 to the U.S. dollar, and now it's been hovering below 7. In fact, this morning it was at 6.94. So when you see the strength in the Chinese yuan, obviously that also increases the value of these foreign exchange reserves. Also, I would also point out that the strength of the currency is also going to discourage capital outflows and more capital inflows as the Chinese currency gets much stronger. And finally, it's also a reflection, as you pointed out in your prior question, of stronger growth, or at least less negative headwinds for the Chinese economy. To the extent that we now see potential deal between the U.S. and China for a trade deal, that will give more confidence to the Chinese economy. And finally, last year, fiscal policy in China added as much as 0.8% to economic growth in China.
How much, Mr. Chen, does that have to do with China's trade? How much does it have to do with the overall China's economic situation, Mr. Chen, given earlier China's record of exchange reserve number? Usually, what are some of the biggest factors?
I think that right now I would say more it's due to the valuation effects rather than the trade, because when you looked at the latest trade deficit report in the United States, what you actually saw was that Chinese imports into the United States actually went down because of tariffs. The more you increase tariffs, the more you discourage the imports. To the extent that you roll back some of those tariffs, you will see Chinese exports picking up, but we have not seen that in the data as of yet.
However, on the other hand, Professor Liu, China's trade with the other economies have been increasing, while the importance of the U.S. in terms of trade with China, if you look at the number, has been decreasing. So how much of that foreign exchange reserve has much to do with the United States, or now it's more about the other economies, Professor?
Yes, I think that's a very good question, because the world actually has been, major economies has been discussing as how they can really reduce their reliance on the U.S. dollar, given that the fluctuation of the U.S. dollar valuation. And so we do notice that one is that many more countries are trying to adopt other currencies and, as foreign exchange reserve, for example, euro and Japanese yen, etc. And the other is that we are also diversifying, or as you say, our trading partners, because some of the trading partners we deliberately choose RMB as a denominating currency. And then also we are now trying to also to diversify what we call the shadow reserves, which means that we are translating some of the hard currencies into equity positions through fund management. So this can really spread eggs in different baskets, and in the meantime strengthen the application of RMB in international trade transactions.
Yeah. A lot of these, of course, are very interesting issues themselves. However, the ultimate question is, what's likely to be the state of China's economy for the year 2020? I guess behind all of the questions we ask, there's always an ultimate question. That is the one. Mr. Chen, what is your reading, given the fact that some of the numbers are picking up over the past 1 month or two?
Oh, absolutely. I think that things are, in fact, getting better. We know that longer term, as the Chinese economy continues to mature, economic growth will slow down a little bit. But for 2020, I look for economic growth in China for real GDP to grow about 6%, which I think is a very healthy number for the Chinese economy. So I'm very confident that you will see 6% growth in 2020.
Right. Professor Liu, now, China-U.S. trade deal, first phase, according to the latest information we have got, particularly from the U.S. side, has a lot to do with talking about standards, talking about international practices, talking about opening China's market, talking about implementation of all of the above. So, Professor Liu, if the first phase being signed as earlier indicated, what does that mean for the nature of China's economic growth for the year 2020 in terms of quality? When quality, if up, will the speed still be following up the quality increase or growth?
I think it's a contributor. One very important issue is the business sentiment. So given that the phase one can really settle at least the trajectory where the China-U.S. Economic relations will be heading into a sort of strategic engagement instead of acceleration of the trade tension. And that's rather fundamental. The other issue is that, yes, we are trying to enlarge our export or imports from the United States, which can really feed on two ends. One is really the consumer, high-end consumer goods. The other would be the raw materials like the agricultural produce and natural gas, etc. That can feed in China. But however, however much of the commitment has been made, it's really up to the market to decide, whether, the price is right, whether the quantity is right. So I think it's really a contributor. As to the general performance of the Chinese economy, I think two indicators can really help the strength of the Chinese economy.
Okay.
One is the dust settling of the China-U.S. trade friction, and the other, I think, is more important, is the 28 principles set forth to provide equal level playing field between Chinese private business sector, foreign business sector, and state-owned sector. So this is really something that is very fundamental to support the confidence of the Chinese private business sector, because they are the major contributor to the Chinese economy and also for its export.
Mr. Chen, we have about 1 minute to go. What is your take if things about the earlier mentioned first phase likely to be implemented? What does that mean to the Chinese economy?
Well, what it means is that you're going to see more opportunities out there. Remember that with this, we're going to be taking back and rolling back some of those tariffs, which will facilitate more exports from China into the United States. But the IMF and the World Bank has also said that these trade tensions have reduced world economic growth by almost 1%. So to the extent that we start pulling back some of that trade tension and removing some of those tariffs, guess what? It's going to enlarge world economic growth, and increase in world economic growth is going to mean more opportunities for the Chinese economy, more opportunities for the U.S. economy, and more opportunities for others. So everyone has a positive boost from the reduced trade tensions. However, the phase one is only the first initial stage, and it's not going to solve all the problems overnight, but it is definitely a step in the direction of lifting some of those negative headwinds from economic growth from China and from many other economies around the world.
Well, we want to thank both of you for helping us to understand the latest about the Chinese economy and certainly the foreign exchange reserve from perspectives of different areas. Thank you so much, Anthony Chen, Liu Baocheng. Appreciate it. Thank you, gentlemen. And that is all the time we have for today. If you'd like to see more, try to find us. World Insight CGTN into your search engine. Check out our YouTube channel, Facebook, and Twitter account. From me, Tianwei, and everyone on the team, thanks for watching. See you tomorrow.